Hi guys, welcome to the business overview series by the FMS Consulting Club. In this episode, we will be looking at insurance business and we will try to split it down into smaller pieces so that it can help you in your case analysis. Even though it's a fairly well understood model, let's just quickly understand how does an insurance business work. For an individual, risks are huge as compared to the amount of money he can allocate towards coverage of those risks. But when a large number of people pool in to insure their risk and only a few of them actually realize those risks, the model becomes sustainable. A significant portion of the money collected by the company goes towards settling of the claims of the unfortunate ones, but the company is still left with enough money to cover all its costs and still make profit on top of that. Insurance business is majorly divided into two segments, life and general insurance. A life insurance deals with covering the financial risk associated with untimely deaths. It can be a whole or term or an endowment type insurance. A whole insurance will pay back the lump sum amount of money to the beneficiary when death occurs of the person insured. A endowment type insurance, on the other hand, has very low maturity periods like 10 to 20 years and hence they often come with higher premiums. A term insurance will only pay the benefits only if the risk is realized within the term of the insurance. On the other hand, everything that is not life insurance comes under the umbrella of general insurance. It can be a marine insurance, car insurance, insurance against theft, or it can be a home insurance. In India, life insurance, which contributes to 80% of the industry, is growing at about 14%, whereas general insurance, which contributes to only 20%, is growing at about 16.5%. The total insurance premium market in India is about $72 billion as of 2016. While solving cases, one of the important aspects to analyze is what are the revenue and cost streams for the insurance business. A profitability case would need them to be analyzed extensively, whereas other business situations might find important cues in these points. The basic revenue stream for an insurance business is premiums that are underwritten. Most of the premiums that are underwritten are not realized to risk. The money that is pulled in through premiums is invested into different instruments, and the return on these investments is a major component of revenue streams for an insurance business. On the other side, the cost, realized risk payments are the major component of the cost for an insurance business. Depending upon the type of policy, some repayments might have to be done when the policy matures. The investment that the insurance company does can suffer losses, and that can also be a cost. Finally, the businesses also need to cover operational costs. These costs typically include office costs such as rent and utility, salaries of the employees, commission of the agents, and all other things that are involved in running a business. While you solve any case, it's always beneficial to talk in terms that can really highlight your understanding of the business. Though that is not what is being tested, but it is always a good complement for your analysis. Two interesting terms in insurance are insurance density and insurance penetration. Insurance density is premium underwritten divided by GDP, whereas insurance penetration is premium underwritten divided by population. In India, though the density has increased in past decade, the penetration growth is on lower side. This indicates that more growth is coming from existing customers than the new customers, and hence it highlights a huge potential that lies in the growth of this business. After understanding the problem presented in the case, the next step is to create a strategy to resolve those problems. And to do that effectively, it is very important to understand what are the opportunities and challenges that the business has and what are going to be the major growth drivers as business goes into the future. With an Indian context for insurance industry, the major growth drivers would be sustained economic growth, increase in disposable income of population, and increase in frequency of lifestyle diseases. IT implementation is one of the major opportunity for cost reduction. According to a TechSci research, IT can lead to 15 to 20% of cost reduction in life insurance business and a 20 to 30% cost reduction in general insurance business. With increasing internet penetration, online services are going to be a major component of products offered by insurance companies. With growing competition, product differentiation is going to be very essential for companies, especially in general insurance segment. Some of the most lucrative opportunities lie in certain specific segments of insurance like crop insurance, micro insurance, and healthcare insurance. Some common challenges to address which can guide your strategies and recommendations in a case interview are improving customer experiences, dealing with regulatory issues, delivering product innovation, and fraud control.